Have you ever stopped to really think about the hidden hands, the unseen forces maybe that have shaped global finance? The ones quietly pulling strings behind economies, even, the outcomes of wars
Right.
for centuries.
It's a fascinating thought, isn't it?
Well, today we're definitely pulling back the curtain on a family dynasty whose story, well, it sounds so epic. Honestly, so far-fetched, it almost feels like fiction, but it is astonishingly real.
And what's truly remarkable, I think, is how this one family, starting from, really constrained, really humble origins, didn't just climb to the top of international finance. No, they meticulously built a system, a network that let them strategically influence political landscapes, even bankroll some of history's most pivotal conflicts. They became arguably the most formidable banking dynasty of their time.
Yeah.
So our mission in this deep dive really is to carefully peel back those layers. We want to reveal the ingenious strategies, the unwavering principles, and yeah, sometimes the pretty audacious gambles that propelled them to, well, unimaginable heights.
We are, of course, talking about the legendary House of Rothschild.
Go.
Their influence, as you're about to discover, it stretches from these cramped, almost suffocating alleys of 18th century ghettos
Right.
through the chaos of the Napoleonic Wars,
Yeah.
the explosion of the Industrial Revolution, right smack into the sophisticated global financial centers we see today. This isn't just a story about getting rich. It's a story of unprecedented dominance, really forged through this ironclad family solidarity in a relentless, almost audacious pursuit of opportunity.
It's
By the end of this deep dive, I promise, you're going to have a truly well-informed sort of insider's view into how this formidable family managed to, well, bend the arc of history to their will. From ghetto trader to financial game changer, the Mayer Amschel Rothschild story. Okay, let's rewind. Let's go right back to the very beginning, to an origin story that, honestly, sounds completely improbable for a family that would eventually hold the financial levers of entire nations. We're talking late 18th century, specifically the Jewish ghetto in Frankfurt, Germany.
And we need to be clear, this wasn't just, a neighborhood. It was a legally enforced confinement.
Exactly. Imagine a place where, just because of your faith, you were systematically barred from owning land, from farming, from joining most of the established crafts guilds, even dealing in what they call the nobler goods. Things like fine silks, weapons, even fresh fruit, strictly off limits. Life was just dictated by these really restrictive laws, often pushing residents into specific, less prestigious trades.
You're absolutely right. The environment was anything but encouraging for grand ambitions. Our sources actually describe it as this cramped, bustling space where shops would literally spill heaps of secondhand clothes and soil household goods into the alleys. It paints such a vivid picture, doesn't it, of this heavily constrained, often quite difficult existence.
Yeah, it does.
And it was within this very specific, incredibly challenging world, this world of severe limitations and social prejudices, that Mayer Amschel Rothschild, the patriarch we're focusing on here, began his journey. He initially followed his family's path, the traditional path as a textile trader, just navigating these narrow streets and, frankly, even narrower opportunities.
The contrast, though, between those humble, almost, you said, squalid beginnings and the colossal wealth and influence that followed, is just one of the most remarkable transformations in financial history, really.
It truly is.
Now, Mayer, being, well, clearly a very sharp mind, he quickly figured out that just trading textiles, okay, it provides a living, but it wasn't going to build an empire. He wasn't content just scraping by. He had this restless ambition, didn't he, to find ventures that offered, significantly higher profit margins.
Right. He was looking for leverage.
And this is where his genius, his almost uncanny foresight, really starts to shine. He soon discovered that trading in gold coins and antiques could be way more lucrative. But he didn't just trade them. Oh, no. He uncovered this brilliant, almost revolutionary strategy that, well, in today's finance jargon, we'd call front-running. Get this. Imagine finding a financial loophole so clever, so audacious, that it basically let you double your earnings on a single deal. Mayer Amschel Rothschild was doing this before the term even existed. It's like he found a cheat code for making money in an era before the rulebook was even fully written.
And this specific practice, it really raises a super important question for us, doesn't it? What does Mayer's front-running tell us about the sort of foundational principles of early finance, especially how critical things like information asymmetry and just shrewd timing were back then?
Absolutely. Information was gold.
Totally. In the 18th century, communication was painfully slow, and reliable market info, that was scarce, incredibly valuable. So Mayer operated as a court agent. Think of it like a modern financial advisor or a broker, maybe. His main client, his most influential one, was Prince William of Hesse-Kassel, genuinely one of Europe's wealthiest rulers at the time.
Okay.
So when Prince William needed to buy, say, a large amount of gold coins, he'd naturally turn to his trusted agent, Mayer, to go source them from the market. Now, here's Mayer's ingenious move. Instead of just filling the order, he would first quietly buy the coins himself, often using borrowed money to snap them up before the prince's big order hit the market or became widely known.
Ah, okay. So he gets ahead of the price move.
Precisely. Once he'd secured the coins, he would then sell those very same coins to Prince William. So effectively, he was acting as both the initial buyer in the open market and the subsequent seller to his own client.
So he wasn't just the middleman. He was strategically inserting himself between the market and his client, creating profit opportunities on both sides of the deal.
Exactly right. This practice, which we now clearly define as front-running, let him profit not just once, but twice. First, he earned his standard 8% commission fee for his services to Prince William. That was normal. But the second, and often much larger profit, came from the act of front-running the prince himself, basically, buying the coins at a lower market price and then selling them to his client at a higher, likely pre-agreed rate.
Wow.
This leveraging of privileged information and just superior timing, especially in a pretty unregulated financial landscape, gave him this extraordinary edge. It allowed him to build capital at a really astonishing pace.
And build capital he certainly did. By 1782, this, let's call it the double dip strategy, had paid off big time. Mayer Rothschild had amassed what's described as a colossal fortune, just a staggering amount for the time. And crucially, he earned the really prestigious and powerful position as the investment manager for Prince William's truly vast wealth.
And this is key to understanding him. For Mayer Rothschild, even that wasn't enough. The wealth was there, sure, but the full legitimacy, the kind of long-term influence he clearly craved, that was still just out of reach.
Right. It wasn't just about the money itself.
That's absolutely right. Mayer had this visionary insight to truly solidify his standing in the world of high finance, and crucially, to ensure the longevity of his family's growing wealth. He understood he needed to evolve. He had to become more than just a shrewd trader or a court agent, however successful he was at it.
He needed respectability.
Exactly. He recognized that to gain genuine recognition, respectability, and maybe most importantly, enduring credibility, he had to establish a formal bank. This move, this transition from being a nimble, opportunistic trader to running a fully fledged banking institution, it was deeply strategic. In that era, when traders and agents piled up significant wealth, becoming a bank was really the ultimate path to legitimacy, and perhaps more importantly, to public trust. By the end of the 1700s, this proved to be just a stroke of genius. It didn't just solidify his personal position as the richest man in Frankfurt, it laid the actual bedrock for something far, far grander.
So what does this pivotal shift really signify? It wasn't just about piling up bigger and bigger stacks of cash, was it? It was about building something foundational, something that would outlast him, something that could stand the test of time and maybe even outlast nations and empires.
That's the scale of his thinking.
He didn't just envision wealth. He envisioned this multi-generational family dynasty, like a financial superpower, but crucially privately owned and controlled. As he apparently articulated his philosophy, it's never about the money. It's about achievement, and it's about winning a game, and it's about upping the ante.
Powerful words.
And he knew, to achieve this grand vision, he needed to think way beyond Frankfurt, didn't he?
Right.
Way beyond just the German states. He needed a truly global vision, a kind of continental chessboard on which to play this high-stakes game. 2, the European takeover, spreading the dynasty's influence.
Absolutely. To sustain that long-term prosperity, to secure the enduring influence of his burgeoning family empire, Mayer Rothschild recognized a fundamental truth. A single hub, no matter how profitable Frankfurt was becoming, it just wasn't enough. He made this incredibly pivotal and, frankly, quite bold decision. He would send 4 of his 5 fiercely ambitious sons out to the most strategically vital capitals of Europe: Vienna, Naples, Paris, and, maybe most critically, the undeniable jewel in the imperial crown at the time, London.
London was key.
Oh, massively. In the early 1800s, Great Britain stood as this unparalleled global superpower, a total colossus dominating both the seas and the rapidly growing industrial landscape. Its empire spanned continents, its royal navy was unmatched, giving it basically uncontested control of global trade routes. And the Industrial Revolution was just transforming its economy, making Britain the industrial and manufacturing powerhouse of the world.
And the money system was already pretty advanced, right?
Exactly. Crucially, its financial sector, centered in London with the Bank of England established way back in 1694, was incredibly robust, incredibly sophisticated. It cemented London's role as the preeminent global financial center. So this wasn't just like random expansion. It was a masterful, strategic placement of key family members, almost like setting up a network of financial embassies in the world's most critical economic and political hubs.
And his third son, Nathan Rothschild, he gets sent off to London, armed with an initial, what was it, 20,000 pounds?
That's right, 20,000 pounds.
Which, okay, it's a substantial sum, but still kind of a humble beginning compared to the fortunes he'd eventually build. For Nathan, though, the psychological pressure must have been immense. He wasn't just starting a business. He was upholding this growing dynasty, proving his worth to a, well, let's face it, a demanding father.
Definitely. He was described as a fiercely ambitious and competitive man, as quick to take offense as to give it in his business dealings. A personality almost perfectly suited for the cutthroat world of London finance at the time. He really felt this intense pressure to show his father he could not only uphold the family legacy, but actually expand it significantly.
And let me tell you, this is where Nathan really becomes a character in his own right. With that initial 20,000 pounds, he quickly zeroes in on the London textile industry. I mean, it was booming, right? Thanks to the Industrial Revolution, Britain's huge colonial markets.
Right, prime opportunity.
He saw a chance not just to get a piece of the action, but to maximize profits in a way others just weren't seeing.
And Nathan's true genius, I think, lay in what he meticulously developed as the strategy to get 3 profits from textiles instead of the usual one. He actually articulated this himself, saying, "I soon found that there were 3 profits: the raw material, the dyeing, and the manufacturing."
However,
Ferry. Instead of just being a merchant buying and selling finished goods, Nathan fundamentally restructured his whole operation. He'd first buy the raw cotton directly, then he'd arrange for it to be dyed, and finally he'd commission the manufacturing into finished textiles.
so he controlled the whole chain.
Pretty much. It allowed him to generate profit at each distinct stage of production, effectively creating a kind of vertically integrated supply chain way ahead of its time. This method let him sell goods at a lower price than competitors who were only working on that single mulch-gym, so he rapidly grabbed market share and established dominance.
It's like he engineered a financial triple dip. He leveraged that initial 20,000 pounds into, what, a staggering 60,000 pounds in a remarkably short time.
Yeah, the returns were fast.
And to ensure those steady revenue streams, and frankly, to exploit every possible advantage. Nathan wasn't exactly playing strictly by the rules, was he?
Not entirely, no.
He boldly ventured into what was, back then, the very lucrative realm of smuggling textiles and precious metals. That's right. He became, in plain English, a smuggler.
He did what he had to do, it seems.
Imagine that. A future banking magnate orchestrating these clandestine operations to bypass blockades and regulations. Who knew that illicit trade could be a stepping stone to global financial power?
Well, it certainly worked for him. By 1808, thanks to his relentless drive and, yes, often unconventional tactics, Nathan had already built this formidable reputation for superior management, judgment, foresight, and connections. He consistently managed to get goods onto the European continent, even amidst the chaos of the Napoleonic Wars and widespread blockade.
That's impressive logistics.
It really was. Within just a few years, his London business was reporting truly impressive sales figures, hitting 800,000 pounds. With that substantial and rapidly growing capital, his ambition was clear, unwavering: transform his enterprise from just a textile house into a proper bank, one that he envisioned would be bigger than his father's bank in Frankfurt.
Always competitive, even with family.
Seems so. And if we connect this to the bigger picture of the time, Nathan's audacious willingness to operate outside conventional norms or sometimes directly challenge them, combined with this unparalleled understanding of market dynamics and logistical opportunities, it really was a defining characteristic of the family's early explosive success. It wasn't just financial skill, it was this aggressive, opportunistic drive, a real willingness to innovate and dominate.
And this drive, it was all underpinned by that powerful family ethos you mentioned.
Absolutely. By 1812, Mayor Amschel Rothschild's health was fading fast, and he knew his time was short. To ensure the House of Rothschild stayed prosperous, powerful, truly enduring, he delivered this dying urge, this command almost, to his sons: put their family unity first and above all. He understood their collective strength, their shared purpose. That was their ultimate competitive advantage.
It sounds almost like a scene from a movie, doesn't it? The patriarch on his deathbed passing down the wisdom that will secure the empire for generations, and that ultimate wisdom, that non-negotiable rule, was explicitly family first, always. This deeply ingrained family bond, coupled with their unique, interconnected, often highly secret way of doing business across different European capitals, it's consistently cited by our sources as the fundamental reason for the Rothschild dynasty's extraordinary and long-standing success. This unity wasn't just, a nice sentiment. It was a practical, operational bedrock. It let them pool resources, share vital information instantly, support each other through crises. It was the foundation that allowed them to pivot from just trading textiles and really embrace the next, even more volatile era, the age of profitable conflict. 3. War, information, and riches. The age of profitable conflict.
Exactly. As the Rothschild sons meticulously established and grew their banking houses across Europe's major capitals, the continent itself was just plunging headlong into this age of intense, prolonged, and increasingly devastating warfare.
Different kind of war than before, right?
Totally different. Unlike the more limited, often dynastic squabbles of the 18th century, which frequently ended with some kind of negotiated truce, the wars of the 19th century became increasingly ideological. They were driven by nationalism, grander geopolitical ambitions, making them far harder to stop or contain.
And this created,
Yeah.
well, an opportunity.
A unique, albeit rather grim, market opportunity for those sharp enough to capitalize on it. For the House of Rothschild, these widespread conflicts became an incredibly profitable business. We can see this really vividly in the UK, for example. Thanks to its increasingly sophisticated finance system allowing stable, long-term public debt, efficient taxes, Britain managed to wage 6 major wars in that century, including those long conflicts against Napoleon, without collapsing economically. It just shows the immense power of financial resilience during intense conflict.
And it really highlights how, even way back then, finance wasn't just about daily transactions or trade. It was intimately tied to national power, military might, and ultimately a nation's survival. It literally fueled the war machine.
Precisely.
Okay, let's jump forward to 1814. The Duke of Wellington, leading the Allied forces, he's winning decisive battles against Napoleon's armies. He's planning to take the fight right into France itself. But there's a critical logistical snag. He urgently needs a significant amount of French coins for expenses for his ongoing campaign down in the Iberian Peninsula. He needs cash right now to buy supplies, pay his troops, keep the whole war effort moving. This wasn't just a request, it was a desperate, time-critical necessity.
And this is exactly the kind of high-stakes, high-reward situation that Nathan Rothschild, with his unmatched foresight and network, just thrived on. He saw Wellington's urgent need not as a problem, but as a once-in-a-lifetime opportunity to elevate his London bank to a completely new level of influence and power.
He smelled blood in the water, financially speaking.
You could say that. Nathan, with his typical self-assurance, later recounted the deal as almost easy. He found out the East India Company had £800,000 worth of gold for sale in London, and apparently, without hesitation, he just bought it all. He knew with total certainty that the Duke of Wellington had to have that gold, whatever the cost. He held all the leverage.
So let me get this straight. You're this ambitious young banker. You hear a duke needs a literal fortune in gold, like yesterday, across a continent burning with war. What do? If you're Nathan Rothschild, you corner the market, you make the government basically beg, and then you charge them a premium for the whole logistical nightmare of getting it there. Pure genius or pure audacity? Maybe both.
It certainly leans towards audacity. But here's the kicker. Even after Nathan snapped up all that gold, the British government, with all its might, didn't actually know how to reliably get such a huge amount of precious metal to Wellington's forces way down in Portugal, especially with French forces controlling so much of Europe.
So Nathan steps in again.
Nathan, ever the opportunist, master of logistics, simply told them basically, don't worry, I undertook all that and I sent it to France. He leveraged his existing clandestine network, those couriers, smugglers, trusted agents he used for his textile business, to move the gold safely and quickly across war-torn Europe.
Wow. Using the smuggling network for the government.
It was a perilous journey, no doubt, but he managed the entire operation end to end. He then famously, almost casually declared, and that was the best business I ever did. This single, incredibly bold transaction didn't just supply Wellington's army. It catapulted Nathan's bank to unprecedented heights of wealth and influence. It cemented his reputation as this financial wizard.
Incredible story.
And the innovation didn't stop with just gold shipments. By the mid-19th century, as Europe continued to be this hotbed of war and complex diplomatic games, countries increasingly faced this critical need for a sophisticated foreign exchange market. Think about it. To start a war, you need to buy foreign supplies, fund armies abroad, that means converting your currency into others. And if you lose a war, you often face heavy reparations, huge payments, requiring you to pay the other side in their currency or in gold. This created this massive, constant demand for efficient, reliable currency exchange services.
And the Rothschilds, with their network already in place across Europe, they were perfectly positioned.
Utterly unique and unparalleled competitive advantage. Back then, the modern regulated banking system we know today, still in its infancy. This meant the Rothschilds, with their established network, their liquidity, they could charge incredibly high fees for currency exchange, sometimes as much as 8% on a single transaction.
Wow, 8%.
But remarkably, the income from these direct commissions, while substantial, was actually only a small part of their overall profit. The real gold mine, the true engine of that unprecedented wealth, became currency speculation. The Rothschilds instinctively understood that in the volatile world of finance, information was everything, and speed was absolute king.
So they weren't just exchanging money, they were betting on which way currencies would move.
Exactly. They were, in essence, arguably one of the earliest and most successful global foreign exchange traders. They developed and used this extensive private network of couriers employing well-trained horses, fast ships, even carrier pigeons.
Pigeons, seriously.
Seriously, carrier pigeons to transmit vital market information and political intelligence across Europe faster than anyone else. This elaborate clandestine communication system allowed them to stay literal days, sometimes even weeks, ahead of their competitors, even ahead of government officials.
That's an incredible advantage.
Huge. This speed meant they could act on news, say, from battlefields or diplomatic talks, long before anyone else knew what was happening. They could buy or sell currencies based on anticipated shifts in value. As a direct result, currency speculation, fueled by their superior information network, became their most profitable business. They literally turned their information advantage into immense, unparalleled wealth.
The profits for the London House just kept pouring in, didn't they? This relentless tide of capital. And it's during this extraordinary period that Nathan Rothschild definitively became the richest man in the world. He was this force of nature, a titan of finance whose every move sent ripples across global markets.
He truly was.
However, even the most powerful man in finance, the guy who seemingly controlled the flow of gold itself, couldn't defeat the ultimate inevitable enemy. On July 28, 1836, the completely unexpected happened. Nathan Rothschild, the wealthiest man on the planet, died suddenly. He was only 58.
Yeah, his death was particularly shocking because the Rothschild family was generally known for remarkable longevity. His mother, for instance, was still alive and well, eventually living past 90. The news just sent shockwaves through the global financial markets. The London Times, usually known for its very measured, understated language, felt it had to rise to the occasion with one of its rare superlatives. An editorial declared, and I quote, "The death of Nathan Mayer Rothschild is one of the most important events for the city and perhaps for Europe in a long time. No operations comparable to his have existed in Europe to this time."
High praise indeed.
Nathan Rothschild's sudden passing had a truly profound, immediate impact on the market, creating huge uncertainty.
This unexpected turn, it really raises a critical question for us, doesn't it? How does a dynasty, seemingly so reliant on the individual brilliance, the audacious foresight, the sheer force of will of one guy like Nathan, not only survive, but actually continue to thrive after he's suddenly gone?
It's a great question.
It points to something deeper, right? A structural foresight, maybe almost a contingency plan, baked into their very business model. Despite the massive impact of Nathan's death, the House of Rothschild lived on without him. It demonstrated the immense resilience of that decentralized, interconnected banking system they had so strategically created.
That network was key.
The individual Rothschild banks, now led by Nathan's brothers and nephews, they continued to thrive, showcasing the foundational strength of their unity and that shared vision Mayer had instilled. But now, with the architect of their London empire gone, they needed a new leader, someone to guide them into a whole new era of challenges and, of course, opportunities. 4. New eras, new challenges, adapting and surviving. So with the irreplaceable Nathan gone, the formidable job, the mantle of commander-in-chief of the family dynasty, the ultimate decision-maker for the whole Rothschild network, it fell to his youngest brother, James Rothschild, who was based in Paris. James was widely described as intellectually and temperamentally Nathan's equal. He had the same sharp mind, the same relentless drive, though maybe, as the sources say, less submissive to his will, a little nod to his own independent streak.
Right, maybe a bit more his own man.
Unlike Nathan, James also had the benefit of more formal, rigorous schooling, which probably sharpened his analytical skills. Now, while financing governments and wars, that was still profitable for the family, the whole financial landscape was starting to shift. Competition was heating up, new players were emerging, and the profit margins on their traditional businesses were starting to, get squeezed a bit.
The easy money was getting harder to find.
Exactly. So to bring his family new glory, to maintain that unparalleled edge, James, ever the visionary like his brother, started looking for the next big thing.
And he found it. He found it in this burgeoning industry that was just poised to completely revolutionize the world, reshaping economies, societies, everything.
The railroads. The steam engine revolution.
Precisely. In the early 1800s, Europe was seeing this incredibly rapid railroad expansion, starting with England's Stockton-Darlington line back in 1825. This wasn't just about traveling faster. Railroads were set to transform transportation entirely. Goods, people moving at unprecedented speeds, fostering explosive industrial growth, enhancing trade across vast distances, fundamentally reshaping landscapes by connecting cities and regions in ways just unimaginable before.
It was the internet of its day, basically.
In a way, yes. This was without doubt the next big thing, the major technological disruption of the era. And James Rothschild, with his keen eye for these big macroeconomic shifts, recognized its colossal potential.
It's almost like they invented venture capital before venture capital was even a thing. Throughout the 1840s, the Rothschilds became absolutely integral to financing numerous railway ventures all across Europe. They were reaping truly substantial profits, not just from the commissions on these massive deals, but also from expertly trading the newly emerging railroad bonds and stocks.
Playing the market, too.
And true to their nature, they were incredibly clever with their money, showing this mastery of leverage. They would often use other people's money to reduce their own risks, pooling capital from multiple investors. James, in particular, played this huge part in what was known as a syndicate in France, basically a consortium of banks, powerful investors, pooling their vast resources for these truly massive capital-intensive infrastructure projects.
So by this point, the Rothschilds were way more than just traditional bankers making loans. They'd intelligently diversified their interests into heavy industries like metallurgy, mining, and above all, the railway sector. However, the core banking establishments, they remained the absolute beating heart of the family business, generating the foundational funds and, crucially, the intelligence for these new ambitious investments.
Right, the bank was still central.
However, it's absolutely vital we acknowledge the broader social context here. This period of rapid industrialization. While profits for the House of Rothschild soared to these unprecedented levels, there's a stark contrast for the average person.
Yeah, life was tough for many.
Across Europe, the working classes often struggled immensely just to make ends meet, enduring incredibly harsh conditions, meager wages. The income gap, the disparity between the wealthy elite and the vast majority, it remained as pronounced as ever, maybe even more so. Industrialists of that period, including many who benefited directly from Rothschild financing, were frequently described as being out for themselves to make large fortunes as quickly as possible, often with very little regard for social welfare or fairness.
And this growing tension, this resentment bubbling under the surface among the populace, it soon reached a boiling point, didn't it?
It did. By the 1840s, France, after enduring consecutive wartime defeats, political instability, found its government deeply mired in debt. The nation's economy teetered on the brink of collapse, and the French populace grew increasingly resentful, not just of their government, but critically, of the powerful financiers like the Rothschilds, who seemed to profit while they suffered.
This public anger eventually boils over into unrest.
Yes, widespread civil unrest. Within a matter of days, James's Rothschild Bank in Paris, once this bastion of financial power, found itself nearing its breaking point, literally teetering on the edge of insolvency. And the shockwaves from the French Revolution didn't stop in Paris. They brought their sister houses in Vienna and other continental branches perilously close to collapse as well.
So James is in trouble, deep trouble.
As head of the French bank and the new family patriarch, James was in a desperate spot. He immediately turned to his nephew over in London, Lionel, Nathan Rothschild's eldest son, for urgent help.
Now, for Lionel, bailing out his uncle's branch, that wasn't a simple decision, was it?
Not at all. It posed a truly significant risk, a potential for substantial loss for his own London bank, which was, by then, the strongest pillar in the family network. However, for Lionel, the principle was crystal clear, non-negotiable. Family unity ranks above all else. That deeply ingrained value, it just transcended pure financial calculation.
Family first again.
Always. The London bank, despite the risk, arranged a crucial timely loan, ultimately saving his uncle's bank from collapse and preventing what could have been a catastrophic domino effect through the entire Rothschild network. And what's fascinating here is how that deep-seated value of unity really went beyond just the money. It also highlights a strategic shift, doesn't it, from purely economic influence towards more direct political engagement.
That's absolutely right. The Rothschilds' influence didn't just stop at financial rescue missions. Lionel Rothschild, beyond his commitment to the family's financial stability, also felt this profound personal conviction. He felt compelled to uplift his people, referring specifically to the Jewish community, by actively fighting to eliminate the deep-seated prejudice and discrimination against them.
A sense of duty?
He believed that to truly advance the cause of religious equality, to break down those barriers, it was essential for members of his community, and specifically himself, to enter government, to demonstrate their capacity for public service. And he wasn't afraid to use his considerable wealth and influence to make it happen. Our sources suggest that Lionel had a lot of money, so he used the money to buy a lot of press to help him get elected.
Strategic use of resources.
It was strategic influence, wasn't it? Leveraging media to shape public opinion and gain political power.
Indeed. By the mid-19th century, most of those long-standing legal restrictions on British Jews had gradually been chipped away. In August 1847, Lionel de Rothschild bravely stood for election as a Liberal candidate for the City of London, a very prominent constituency. And he won. A momentous occasion.
But there was a catch, right? The oath.
A significant hurdle remained, yes. To be fully sworn in as a member of the House of Commons, he was required to recite an oath on the true faith of a Christian. But Lionel, as a devout Jew, steadfastly refused. He insisted he would only swear on the Old Testament. This refusal sparked this decade-long political and constitutional battle, really highlighting the lingering religious discrimination.
Wow, a 10-year fight.
His unwavering stance, which eventually led to the reform of the oath itself, became this truly monumental step. Not just for his family, but for religious equality in British politics as a whole. It marked this powerful intersection of finance, family legacy, and the fight for social justice. As James Rothschild aged, Lionel gradually, naturally assumed the role of the family's patriarch, taking on the leadership of the entire sprawling dynasty.
And this was a critical transition, because just as he's taking the reins across the Atlantic, a truly formidable new challenger was starting to emerge on the global stage. The great American challenger. House of Morgan rises.
Right. While the House of Rothschild absolutely maintained its supreme financial reign across Europe, this new, incredibly dynamic banking empire was rapidly emerging over in America, poised to seriously challenge their long-held dominance. The House of Morgan.
America rising.
Definitely. The period from the 1850s to the 1870s marked this era of truly explosive, transformative growth in America. This incredible expansion was just propelled by the accelerating Industrial Revolution, an aggressive, relentless westward expansion across the continent, and, of course, the monumental completion of the Transcontinental Railroad in 1869, which literally stitched the nation together.
And the rise of the robber barons, as some called them.
Well, the era certainly witnessed the spectacular ascent of industrial titans. Cornelius Vanderbilt in railroads, building an empire of steel and steam, Andrew Carnegie in steel, revolutionizing production, John D. Rockefeller in oil, creating the unprecedented scale of Standard Oil. These tycoons weren't just rich men, they fundamentally transformed American business. They introduced innovative new production methods, groundbreaking logistical efficiencies, and these fresh, often quite ruthless organizational structures that were unlike anything seen before.
And this rapid ascent, it really embodies that quintessential American ethos, doesn't it?
Yeah.
The reason the United States eventually became the leading economy in the world is, to a huge extent, due to the work of these visionary, sometimes uncompromising entrepreneurs who didn't just join industries, they created entire new ones. They propelled the U.S. from this sort of nascent republic to the undeniable leader of the free world. Now, for many years, the Rothschilds, firmly planted in their European strongholds, they largely underestimated America, didn't they? Often dismissing it as a land of madmen, too chaotic, too unpredictable, lacking the stability and sophistication of European finance.
Yeah, they saw it as too volatile, too raw, maybe not quite worthy of their full attention.
But as they watched the rapid rise of the House of Morgan, and saw Wall Street's undeniable emergence as this new global financial hub. The House of Rothschild, ever the pragmatists, eventually recognized their misjudgment. They started to cautiously pursue more business opportunities in the United States. And as the old saying goes, sometimes the best opportunities for a shrewd financier arise when there's, well, blood on the street. For America, a day of reckoning. A financial panic was lurking just around the corner in 1893.
But before we get to that dramatic panic, let's quickly zoom in on the key figure leading the charge for this new American financial power, Junius Spencer Morgan. A British banker by birth, he took decisive control of the already formidable merchant banking firm George Peabody and Company by 1864, when its founder retired.
And he was different, wasn't he? Not flamboyant.
A stark contrast, yes. Described as having a gravely mature air, always solemn and businesslike, and crucially, always master of his emotions. He understood with this clarity that really set him apart, that to truly play in the big leagues of global finance, he needed to venture deeply into government financing. And for a banker in the 1800s, nothing presented more colossal opportunities than wars.
Okay, here's where it gets really interesting. A master class in strategic risk-taking, maybe. In 1867, tensions were simmering again in Europe. France, under Emperor Napoleon III, tried to buy Luxembourg from the Netherlands, seemed minor. But Prussia, rapidly rising under its chancellor, the notoriously ruthless Otto von Bismarck, vehemently opposed it, saw it as a threat to German influence.
Bismarck was playing a long game.
He was a complex figure, described as having a wild temperament, almost a raging bull in his approach, yet possessing this clear intellect and tremendous precision in his strategic planning. He was just waiting for an excuse, really. On July 19, 1870, Napoleon III, miscalculating Prussia's strength and Bismarck's sheer resolve, declared war on Prussia. This declaration played perfectly into Bismarck's hands, leading to the war he needed for German unification under Prussia.
Now, having financed wars for over a century, the House of Rothschild possessed this almost uncanny ability to predict winners and losers. They had very little faith in France's ability to defeat the formidable, technologically superior Prussian army under Bismarck. So logically, it made no sense for them to lend substantial money to France. They saw it as a losing bet.
So Rothschilds stay out.
While major European banking houses like Rothschild and Baring carefully avoided lending to the French government, Junius Morgan saw this as the opportunity of a lifetime. His perspective was profoundly different. It didn't matter to him if France could win the war. What was absolutely crucial, the only thing that truly mattered, was could France repay the loans, even if they lost.
Focus on the ability to pay, not the outcome of the war.
Exactly. He quickly understood that even if France lost, the nation's underlying economic resilience ensured they could pay back the loans. Our sources highlight that although French politics was very shaky at the time, the French economy was very diversified, and more importantly, it had a very efficient tax collection system that guaranteed revenue streams regardless of political chaos. This really highlights a crucial difference in financial risk assessment, doesn't it? While one view might focus on geopolitics, Morgan's brilliance was seeing that underlying economic strength a powerful lesson in finding hidden value, even in seemingly risky situations.
Talk about a calculated risk that paid off big time. Through his powerful syndicate, Junius Morgan successfully raised over £10 million for the French army, a massive sum then. And as an American banker, crucially, he also gave the French government direct access to buy American arms, a vital military edge. The Franco-Prussian War, of course, ended in a decisive German victory, reshaping the map of Europe. But when the war ended, the defeated French, instead of defaulting as some, maybe even Bismarck might have expected, they surprised everyone. They meticulously repaid the bonds, even prepaid them, in 1873.
Wow. They honored the debt.
As a direct result, Junius Morgan walked away with an absolute fortune. That single loan netted him a whopping $1.5 million. This colossal profit massively boosted his firm's capital, gave him immense leverage, and unequivocally propelled him into the top tier of government financing. It firmly established the House of Morgan as this formidable force in global finance, truly ready to challenge the long-held dominance of the Rothschilds.
And by the late 1800s, the House of Morgan was indeed a formidable, rapidly rising force on the global stage. The Rothschilds, despite their enduring power, they faced mounting challenges, increasing fragmentation among younger generations, maybe pursuing individual interests, a changing competitive landscape in Europe.
So they needed a new strategy.
To rebuild their prestige, find new avenues for growth, the Rothschilds strategically looked beyond Europe, investing heavily overseas. They allocated a significant 37% of their entire portfolio to ventures in places like Egypt, financing Indian railroads, deliberately seeking a more expensive marketplace, a higher yield, maybe higher risk environment in the growing global economy.
And that expensive marketplace would soon deliver a monumental crisis right to America's doorstep. So imagine this. It's 1893. The U.S. government is literally on the brink of financial collapse, hemorrhaging gold reserves. Who do you call? The Morgan Bank. And who does Morgan call? The Rothschilds, of course. It's like the original financial superhero team-up, but with bank vaults instead of capes.
Huh. A good analogy. That day of reckoning for America arrived May 9th, 1893, the event ominously known as the Panic of 1893. After decades of a booming railroad market fueled by overexpansion, rampant overbuilding, the industry just suddenly collapsed. This triggered one of the worst, longest depressions in American history.
And President Cleveland was stuck. Right.
President Grover Cleveland, facing immense pressure, was absolutely determined to maintain the gold standard, the system tying currency value directly to gold reserves. He staunchly refused expansionary fiscal policies, believing it would devalue the currency. Back then, remember, the U.S. dollar wasn't the world's main currency. The British pound was king. Cleveland felt that to maintain the credibility of the U.S. government, its global standing, he had to meticulously maintain the convertibility of dollars to gold. But the government was running dangerously, critically low on its gold reserves, threatening a total collapse of confidence.
Enter J.P. Morgan.
Precisely. J. Pierpont Morgan, Junius Morgan's son, who had now taken the helm of the House of Morgan, stepped in with decisive action. He had this keen grasp of the disastrous outcome facing the young country and, by extension, his own banking empire without immediate radical intervention. And he knew, with a certainty born of decades of watching the markets, there was only one family with the unparalleled access to the truly vast amount of gold needed to bail out the federal government. The House of Rothschild.
Because the Rothschilds had been investing in gold mines.
For the last 3 decades, yes. The Rothschilds had been strategically, foresightedly investing heavily in gold and silver mining operations across the globe. Their interest in gold mining grew rapidly, and crucially, many of the bond issues they handled for governments were directly linked to that country adopting or sticking to the gold standard. This gave them unique leverage and insight into global gold flows.
So, J.P. Morgan, using his immense influence, he brokers a deal. He raises $65 million by issuing government bonds, uses that huge sum to negotiate with the Rothschilds, ultimately buying 3.5 million ounces of gold for the federal government.
It was a mutually beneficial alliance, really a testament to the enduring power of relationships and shared interests in high finance. Banks, then as now, generally like doing business with governments because historically governments usually pay back their debts. They can collect taxes after all.
Right. Good credit risk, usually.
The collaboration of these two financial titans, Morgan and Rothschild, lent this air of unparalleled credibility and security to the bond offering. It made it one of the most sought-after investments of its time. The gold bonds apparently sold out to the public in a remarkable 30 minutes.
Wow, 30 minutes.
The resounding success of this alliance, the swift resolution of the Panic of 1893, it marked a truly significant turning point in global finance. It didn't just solidify America's financial standing globally. It effectively saw the United States enter the international arena as a new, undeniably powerful empire, one that unequivocally rivaled any in history, truly establishing itself as a global superpower. This extraordinary cooperation between the old European banking giant and the rising American powerhouse really showcased the evolving global financial landscape, hinting at the profound shifts still to come. 6. The modern era. Fragmentation, scandals, and quiet influence.
Right.
While the Rothschilds successfully expanded their business into America, cemented their influence worldwide by the late 1800s, early 1900s, the old empires back in Europe were just inexorably heading for another devastating conflict. By the early 1900s, tensions among the great European powers reached this boiling point. Fueled by aggressive imperial rivalries, an unprecedented military buildup like the Anglo-German naval arms race, and these complex, often volatile alliance systems.
And while war is generally bad for business.
Well, while the path to war threatened businesses with potential catastrophe, widespread economic disruption, the House of Rothschild, ever the opportunist perhaps, saw a chance to capitalize on the growing tensions through, you guessed it, war financing. Natty Rothschild, who was then the influential head of the London Rothschild Bank, even actively advocated for the British government to significantly expand its naval capabilities, knowing full well this would lead to substantial increases in military spending and, inevitably, more opportunities for financing.
But what the Rothschilds, and frankly many others, didn't fully grasp was that the war about to erupt would be far more brutal, far more deadly, on an unimaginably larger scale than anything they had ever seen before.
Exactly. The assassination of Archduke Franz Ferdinand in June 1914 served as that tragic spark triggering World War I, plunging Europe once again into this full-blown, unprecedented conflict. This war introduced horrific innovations like trench warfare, devastated new weaponry, and resulted in truly massive casualties, an estimated 10 million soldiers, 7 million civilians dead, a scale of human loss just previously inconceivable.
And for the first time, the family itself was divided by the conflict.
Yes, for the first time in their long, interconnected history, members of the Rothschild family found themselves aligned with opposing sides in the war. A truly devastating internal division that must have stretched the very fabric of their famous unity.
Wow.
And if we connect this to the bigger picture again, the world wars fundamentally reshaped not just geopolitics, but the very structure and power dynamics of global finance. Though the Rothschilds, with their deep-seated resilience, they survived World War I, even managed to profit from war financing, their scale of operation was increasingly overshadowed by that rapidly rising banking dynasty in America, the House of Morgan, now led by J. Pierpont Morgan's son, Jack Morgan.
Morgan really took the lead then.
The Morgan Bank served as the single most important financier for the U.S. government during World War I, orchestrating the raising of vast funds through war bonds, extending crucial loans to European allies. It really cemented America's financial supremacy. After World War I, the House of Rothschild found itself in a period of, well, significant disarray. Their undisputed heyday was gradually waning.
And the next generation wasn't as interested in the bank.
Perhaps most tellingly, some of the most intellectually gifted, dynamic members of the next generation of Rothschild men actually turned their backs on the traditional family banking business, seeking careers elsewhere. The different Rothschild banking divisions, once this tightly knit network began to pursue more varied objectives, became more deeply integrated into their respective host countries. It led to a degree of strategic fragmentation within the overall dynasty.
And this tumultuous period also saw that dangerous surge in anti-Semitism across Europe, right? Driven by economic hardship, political instability, the search for scapegoats.
Tragically, yes. The Rothschild family, as the most prominent, visible Jewish bankers, became a convenient target, facing heightened scrutiny, baseless accusations, outright hostility. In Germany, after its crushing defeat in WWI and during one of its most severe economic downturns, the stage was tragically set for Hitler's brutal rise to power, which spelled immediate catastrophic trouble for the German banking branches of the Rothschilds.
Then World War II erupts.
Then, in 1939, just 21 years after the end of WWI, the biggest, most brutal war in human history starts again. In the spring of 1940, Hitler secures victory after victory, sweeping across Europe with astonishing speed. Denmark, Norway, the Netherlands, Belgium, France. With Britain targeted, the grim reality became horribly clear. If Hitler conquered all of Europe, the House of Rothschild as a Jewish banking dynasty faced its certain demise.
An existential threat.
Undeniable. Many Rothschild family members, facing unimaginable persecution, were forced to flee Europe, seeking exile, safety in countries like the U.S. or England. They endured truly significant financial and deeply personal losses as their extensive assets were seized by the Nazi regime, their historic properties confiscated or destroyed. This period wasn't just about financial shifts. It was a tragic chapter of profound human cost, forced displacement, immense suffering. It showcases that horrifying intersection of economic power and extreme geopolitical events driven by pure hatred.
So as the dynasty became increasingly fragmented, battered after WWII, it fell to N.M. Rothschild in London to kind of pick up the pieces.
To take on the immense, almost daunting challenge of rebuilding, carving out its own distinct direction in a vastly changed world.
And their strategy remained government financing.
For N.M. Rothschild and Sons in London, surprisingly perhaps, their core competitive advantage remained government financing. Their deeply held belief was, as long as they cultivated and maintained strong, reliable relationships with the governments of stable, powerful countries, their business would always find success. Rather than aiming for aggressive global expansion like the American banks, the London branch largely preserved its traditional business model, this private club, discreetly financing elites and governments while carefully avoiding public scrutiny.
But even that couldn't shield them entirely, right? The Maxwell scandal.
Even that strategy, designed for discretion, couldn't fully shield them from new challenges, a changing financial world. By the 1970s, a future media mogul named Robert Maxwell, a larger-than-life figure, traumatic childhood with family lost in the Holocaust, sought N.M. Rothschild's help to aggressively expand his business empire. He was driven by this absolute imperative to never be poor again, and he needed vast sums of capital, the kind only powerhouses like the Rothschilds could provide.
And then there was internal conflict brewing, too.
In the 1980s, yes. While Maxwell's investments seemed okay on the surface, internal strife, rare but significant, brewed inside N.M. Rothschild. Lord Victor Rothschild and his son Jacob found themselves on one side in this fierce ideological struggle with their cousin, Sir Evelyn de Rothschild, who then led the London Bank.
Over the direction of the bank.
Exactly. The banking world itself was undergoing these massive seismic changes. Bigger banks swallowing smaller ones, radically new ways of making money derivatives, options challenging traditional lending. Jacob Rothschild saw these shifts and believed the bank had to adapt, embrace modern corporate strategies, aggressive expansion, maybe even consider public ownership to compete.
But Evelyn disagreed.
Sir Evelyn, staunchly upholding the family's traditional values, asserted that modernizing the ownership structure risked the family's absolute control. He insisted the Rothschild Bank must always remain wholly owned by the Rothschilds, even if it demanded significant short-term financial sacrifices to preserve their unique identity and discretion.
So get this. After surviving world wars, economic crashes, fending off American challengers, the family faces its own intense internal drama right as the banking world is transforming faster than ever. And then, bam, a truly massive scandal erupts, threatening to drag the Rothschilds' carefully guarded reputation through the mud.
The Maxwell collapse.
The millionaire newspaper publisher Robert Maxwell, the client we just mentioned, mysteriously disappears overboard from his private yacht, the Lady Ghislaine, in 1991, near the Canary Islands. The investigation afterwards was just sensational. Revelations surfaced that Maxwell had misappropriated hundreds of millions of pounds from his employees' pension funds to prop up his failing businesses, sustain his incredibly luxurious lifestyle.
And the circumstances of his death remain murky. Some speculate, as our source notes, that the line between suicide and an accident is less clear-cut, adding another layer of grim mystery.
So the Rothschilds weren't directly implicated in the fraud, but the association hurt them.
While their direct culpability in Maxwell's illicit activities remained unclear, largely unproven, the sheer scale of the scandal, their association with him, it undoubtedly blemished their meticulously guarded reputation. It shone this unwelcome spotlight on their discreet operations. However, for Sir Evelyn de Rothschild, the very man championing the private conservative model, the Maxwell scandal ironically served to reaffirm his deeply held beliefs about the bank's absolute need for discretion, privacy, and cautious family-centric ownership.
Interesting justification.
Despite these immense challenges, shifting dynamics, N.M. Rothschild today is still just one part of the extensive, diversified Rothschild legacy. By 2023, the family has strategically diversified its interests across multiple sectors far beyond traditional banking, now encompassing sophisticated investment banking, wealth and asset management for high-net-worth clients, private equity, significant philanthropic endeavors.
So they adapted again.
The original Rothschild banking establishments in Paris, Frankfurt, Vienna, London, Naples, once the bedrock, have themselves profoundly adapted to the evolving global financial landscape, transforming to meet modern demands while often retaining that distinct private identity.
What becomes so profoundly clear, looking back at this whole sweeping history, is that the Rothschild family was never shy about making money. They were masters at it. But what's truly striking, I think, is when it came to maintaining their long-term family legacy, their collective control, they consistently showed this almost unparalleled ability to let go of immediate, lucrative opportunities if those opportunities clashed with their multi-generational vision. They played the long game, didn't they, even if it meant short-term sacrifices?
This kind of long-term view, this unwavering commitment to a multi-generational legacy over immediate profit, is both incredibly respected in the financial world and, frankly, a little scary. It raises a truly important question for us, doesn't it? In a world driven by quarterly reports, volatile stock prices, the relentless pressure for short-term gains, what does it truly mean for a financial powerhouse to prioritize a legacy spanning centuries over immediate profit opportunities? It profoundly challenges conventional wisdom about what truly defines success and influence in the long run.
So what does this entire incredible saga mean for you listening right now? We've seen how one family, starting with almost nothing, built this empire of staggering wealth and influence by consistently being ahead of the curve, by embracing immense calculated risks and by valuing family unity above almost everything else. They navigated devastating wars, weathered monumental economic shifts, survived internal disputes, adapted to new eras of technology and finance, all while maintaining their extraordinary stature. It makes you wonder, doesn't it, about the hidden currents of influence that still flow beneath the surface of our world today, and how some players are always thinking on a much, much longer timeline, shaping events in ways we might not immediately see.
This deep dive truly underscores that finance isn't just about numbers on a spreadsheet or algorithms. It's fundamentally about information, about forging and leveraging relationships, about foresight, and about this relentless, almost visionary pursuit of what's next. Perhaps the ultimate, most profound lesson from the Rothschild dynasty is that true, lasting wealth and enduring power are built not just on what you gain in the short term, but on what you are strategically willing to sacrifice and what you're willing to plan for across generations for the long game. What stands out to you from this incredible journey?